Okay, guys, welcome back to the podcast, the Capital GPT podcast with Jared Naidu. I'm here with a special guest. We've been following each other for a while. We've met like 5 years ago, practically, but we've been
Mm.
in contact through socials, following each other's stuff. I'm joined with Sam Mfeka, and he's literally been killing it in the forex space, killing with the modern day trader on his social media. And yeah, he's been trading since I know him. I think he studied engineering and then he went into the financial space, financial planning, and now he's doing financial planning and day trading. Um, yeah, anything else I've missed out on what you've done, your background, because I could play a vital role in context wise.
Sure, sure. Yeah, no, I mean, thanks for having me on the
Uh,
pod. Love what you're doing. Like you said, we've been following each other's work for a while. Since back in Durban, I think where we initially met. So yeah, my background is in engineering. Started studying civil engineering here in Cape Town. And it was in my first year that I actually, end of first year, that I started trading, or was rather introduced to I guess, the markets and started learning about what trading is. I guess for the same reasons everyone else does. You're like young, you want to make money,
yeah,
you want to make money on the internet, and there's like you consider drop shipping and all these different things. But it was just seeing a friend online kind of posting these charts and talking about trading, and I was just hooked. I was like, I don't know what this is, but I want to do it because it seems like you just live such a cool lifestyle and
yeah,
work from your phone and all of this. So I sucked into it. That was 2017.
yeah.
So yeah, it's been about, I
Eight,
guess, 8 years. This is the eighth year that
so
I've been in the markets, and was sort of trading while I was still a student. Thought I'd have it figured out by the time I was done, but didn't. So yeah, I worked in construction for and then, yeah, realized that wasn't really what I wanted to do. And then slowly made the transition into, I guess, financial services, which is where I'm at, where I am now,
yeah,
which is a financial planning and asset management firm. And I guess it's my trading that's kind of kept me kind of rooted in the investment management side of things and kind of the finance world.
yeah,
Uh, and so yeah, that's kind of my journey and how I sort of transitioned into where I am today, and I guess trying to figure out how the two speak to each other, right? Because
yeah.
it's very different skill sets, but you want to make it work.
Yeah.
Yes.
Did you did you when you transitioned into financial planning and asset management, did you then
Mm.
study something else to transition? Because you went from civil engineering to then financial management. So did you study something or did you show your experience in the markets to be like, okay, cool, this is
Mm.
how I can transition from civil engineering to then asset management because of the portfolio, my personal portfolio that I've managed.
Yeah. To be honest, my trading probably played, I'd say maybe little or no
Okay.
role in that transition, but maybe I'm also not aware of what skills I picked up in trading that helped with that. But yeah, so I was essentially working on site on the construction side. And that was family business, and within that, there's almost like a property development side of it. So, after a year or two, I transitioned into that, where I was focusing a lot on like affordable housing, like property
Mhm.
developments, and that kind of exposed me to, I guess, your capital markets
Right.
and, raising capital because it's a project that, actually still working on, where we were, meeting investors and both on the public and like private side of things to raise equity and debt and whatnot. And so I started studying Kaya, which is a Chartered Alternative Investment Analyst sort of designation. If you guys know CFA, then it's basically same structure as CFA, but for private markets and
Okay.
alternative investments. So private equity, hedge funds, commodities, real estate, but all on like the institutional side.
Mm.
But then they bring in a bit of like wealth management and stuff with that
Yeah.
because that's a large or growing segment, I guess, of
Yeah.
private markets. So yeah, that was about a year and a half that I was studying that while working kind of in the property development space, and then kind of just wanted a firmer footing in kind of the investment management aspect of it because I was kind of still in between construction and I guess the finance element of that. So yeah, then once I'd gotten the designation, that just kind of opened a lot of doors because you've got that on your CV now, and
100%.
yeah, you you get a lot more opportunities when you have
Yeah.
that on your name, which
100%.
I guess people take for granted. You hear a lot about how, you don't need university and all of that these days, and arguably you don't. It's a conversation starter and it gets you in the
Yeah.
door. You've still got to close and finish the job,
100%.
but yeah, it helps to getting that foot in the door. Hard time, and then it was, I guess, my experience of managing my own portfolio and, knowing what risk is, return, and being able to discuss those aspects, I guess, in an institutional context or like in a professional sense, because you you have to figure that out on your own as a trader. There's no really like structured way of learning
Yeah.
about the market. And so yeah, it took, I guess, blending some of what I'd learned as a trader with new stuff to, yeah, land the job.
Nice. Nice. I think it's valuable information. I think because a lot of people maybe want to get into that side, but don't know how to.
Mm,
Because from my experience, like you could be well at, you could do a lot of trading, you could know um, the markets, but transitioning into
mm,
financial management or asset management. I think people don't really know how to do that. I think they have to do like a
mm,
3 years or 4 year degree or whatever. So yeah, thanks for the information. I think coming back to your trading, I think people want to know about your trading, right? So, like you said,
yeah.
you've seen your friends make money, post charts and stuff, um, potentially live a lifestyle, and
Mm,
I think from watching your trading, right, and seeing your golden nuggets on Reels and TikTok and stuff, um,
mm,
you trade very differently to the South African market, right? And the reason why I say that
yeah.
is the South African market is full margin trading. Let's risk all our
Mm.
capital. Let's risk 10K to make 500K. Whereas you trade, let's risk 0.5% of our account per trade. Um,
Yeah.
and yeah, talk me through that. What made you go into risk trading that way instead of the rest of the world, or rest of South Africa per se?
Sure. Uh, Geez, you get to a point where you just lose too much
Yeah,
to carry on. I guess it's unsustainable, which is the side of it that you don't see because that's the side
yeah,
of it that doesn't sell, right? Who would
100%.
buy into a course or a mentorship if they knew they were going to lose all their money?
Yeah,
Or, I mean, I guess they tell you, yeah, there's risk in the market and all of this, but they don't tell you how high that risk is or how
yeah,
much sooner it's probably going to happen than, you
yeah,
think it is. So that was the way I used to trade. And look, that was probably when I made the most money in a single day,
yeah,
as opposed to now, even though obviously now it's going to be a lot easier to match that, but I haven't yet because I've recently gotten funded on the six figure account. But
nice.
you know, when you're risking everything, it's easy to make it seem like you're making a lot too, but
Mm,
at what cost? And so was started out that way, but it's so hard to learn that way because with one trade, you've lost everything, and
yeah,
then you're back to trading demo, while then you're making a plan and hustling odd jobs
yeah,
here and there to fund another account, and then you fund another account, and it may not go as well again, and then you're back to square one, and it's just this like toxic cycle of
Yeah.
gambling, really. Because I think with in the absence of knowledge, trading is just gambling, to be honest. And most people are actually just gamblers in trading. When you don't know why you're placing a trade, when you don't know what risk is, or you're not even, defining your risk clearly before, whether
Mm.
that's based on your account or based on structure, you rolling the dice, and nothing's ever guaranteed in the
Mm.
market. It's a game of probabilities. And so
Yeah.
when you don't know what the outcome is going to be, what business do you have risking all your capital
Yeah.
on one trade? I mean, yes, there are very talented, skilled traders risk, who are highly leveraged and risk,
Mm.
20, 30% of their capital. Um, and look, as much knowledge as I can have, I'll never maybe get to that point. But, there's still some sort of knowledge there. When you're still beginner and learning and trying to grasp the strategy, really, because that's where I guess your first learning point is,
Yeah.
then the full margin mode just for me is just so unsustainable. And I think if anything, when I see a trader or mentor marketing that, that's just the biggest red flag to me. And I'm
Mm.
like, this guy probably can't trade and they're selling a course.
Yeah.
But obviously I don't know until I know.
100%.
But it's just I haven't known a trader to trade that way throughout the time I've been trading, which is 8 years,
Mm.
and is successfully trading that way
Yeah.
still.
Yeah.
People can say, but I've been in 10 years or so. Well, I don't know, bro. I don't
Yeah.
know. I haven't known you for 10 years. I'm saying from my experience, the people I've known that have been transparent enough
Yes.
with me to say, this is what's worked, this is what hasn't. There's no one who
Yeah.
said, every week I can come to the market, put in 2,500, and I'm going to walk away with 50,000 end of the week.
Mm.
So it's just the sustainability aspect of it. And I guess it's a long-term game, which is what a lot of people don't tell you. And if you want to play the game long-term, managing risk and managing capital is essentially what is going to keep you in the game long-term. And so I guess that's why I take a bit of a different approach to it, because I know I'm still learning, and that's yeah, we're trying to take this far. So
Yeah. There's a few things that you said, right? So I think the first thing is that like the people that have been in the game for like 10 years or so, 8 years or so, uh, they they haven't they're still not in the market, or they still, are profitable. But there are a few that I've seen. But from my theory, it's they're selling signals, and then secondly, affiliate links, which then
mm,
generates a lot of income that people don't really know. Like affiliate links, you could get up to like maybe 50% of what the person, or 25%, 50% of what the person has deposited.
mm,
So some of these guys are sustaining their lifestyles through other people's money, through affiliate links, through
mm,
signals. Um,
yeah,
and they still hustling people. Um, yeah, but that's what I've seen in the markets. You don't have to touch on it if you don't want to.
yeah.
Um,
No, I mean let's touch on it a little, because I think it's interesting what you're saying, because
mm,
I guess the trade-off is also that in whatever pool of people you're able to attract, let's say they're able to get 100 people into a
mm,
conference, just pay 100 Rand, whatever.
yeah,
Already one, that's a fee just to get there. You can do the math, whatever it
mm,
is. Of those 100 people there, you're gonna get maybe 70 of them to sign up to your signal service. You only need 5 people to make a decent amount of money on signals
mm,
to attract another 100 or 200 people. So, and that could arguably be down to luck kind of thing. And
yeah,
so it's like there's those arguments being made that how, but here's this person who's running the signal group. They've got, all these success stories within their group. But like over time, from different, you don't know how many people actually attended this conference, how many people
yeah,
signed up, and how small the percentage of people who are actually making money, whether, that's because they can trade or because they just got lucky is.
mm,
But you also don't know. how much has it from, and what looks like an insignificant amount,
Yeah.
100 rand, 200 rand for a day, but the amount of people that are attending these things, because that's if you have 100, 200 rand and you think that's going to change your life, or someone's at least telling you that come make money, don't just sleep on the weekend.
Mhm.
You don't even want to invest in your future. It's what's 100 rand to
Yeah.
potentially make. You're gonna get sucked into it, and the desperation is gonna get you to that event, whether you're gonna make money or not. I don't know. So it's yeah, it's a crazy industry, bro. And the the illusion can keep going for a very long time,
Mm.
but you see it with so many people, and I think Jason Noah, who's kind of taking the heat now, had been keeping it going for so long
Yeah, yeah,
for whatever reason, but it's like you have your day at the end of the day. Like it catches up with you
yeah,
when that transparency or you're not authentic kind of in what you're doing.
yeah.
So yeah,
These
that's my
stories
two cents
crazy.
on it. But let me not say any more names. Next thing
Yeah.
everybody heats on me.
Yeah, that's the thing. You're not selling a course. You're not trying to make money off people. So you've literally just documenting your journey. Uh,
Sure.
yeah. So it's not like you calling up people and then you hypocrite. It's not. You're just documenting your journey and you're transparent that, hey, I'm still learning, but I'm showing you guys what I've learned. Um, and I've seen you now transition into the prop firm space, right? And
No.
I've also had experience with prop firms. It's so difficult, so annoying, so challenging at times because you could go into
Mm,
a live account and you could pass phase one, phase two, and then your live account and you're done, bro. So it's a
mm,
like the frustration, but I think talking through why you transitioned from personal funds to then going into prop firms. Yeah,
mm.
what's your experience on that?
Sure. I think the biggest driver behind transitioning from the personal side to prop firms is the leverage in capital. Like you pay a small fee to access a much bigger account. It's not real funds in a sense, it's actually still demo even once you
Yeah.
fund it. But at the end of the day, the profits that you generate off that are effectively yours. So for me, that makes it worth it. As opposed to, if I had the same 7K, trading 7K in your personal account, it still comes with a lot of the emotional kind of hurdles and hindrances that are going to keep you greedy and wanting to kind of double that or triple that before you're
Yeah.
starting to make something decent. So I think just if you've got skill and some sort of discipline, prop firms are still the best tool to trade capital um, at a lower fee.
Hmm.
I think it also an element of prop firm trading that makes you really focus on the psychological side of things. And I think
Yeah.
trading in a certain way because you're restricted, you don't have free reign, you're not going to go full margin. And so I think it teaches good risk management and discipline, which most traders need. But it's also still a crazy space. And the success rate is terrible. I think we all know it. I mean, I was reading up a bit before this. It's like I think what was observed was about 300,000 prop firm accounts, and that
Hmm.
belonged to, I think, about 100,000 traders. Of that, 45% passed, so less than half,
Yeah.
and then and got funded. And then of those that got funded, there was only about 7%, well, no, 14% of those that passed got their first payout,
Yeah.
which is about 7%, I think, of no, I'm lying. It's the other way. It's 14 past the valuation,
Okay.
which is even lower.
Yeah,
And
yeah,
of that 14, then 45%
yeah,
got their first payout, which is about 7% of like all traders who
yeah,
pay for prop firm challenge. But you still pay for the challenge. And so you see where the money, at least for the prop firm, really is. It's in the challenges as opposed to people getting paid out for the challenges. And
yeah,
that's why I guess you're also trading demo in a
Yeah.
sense. And so that's been for me a big learning curve. I think I started trying to get funded in 2021. Um, so did my first 5K, I think that tried a 10K account. That was with my Forex funds. I
Okay.
passed phase one, I was on phase two, and then my Forex funds went under. And so that was like, you wake up one day and like you see your prop firms being liquidated, and you're like, oh, goodness, you're like, yeah, back
Yeah.
to square one kind of thing. Because you also, it's also not cheap to access those prop firms. So
Yeah.
it's money that not that you can't afford to lose, but
Money you risk.
losing that is it's gonna set you back a bit. So that was a big setback, and then came back, tried to buy 10K from FTMO. That just slowly trickled to max drawdown. And this was over like 2021 to, I guess then I got the 100K last year, 2024. So over a 3-year period, I was really only in between like three prop firm challenges, which isn't a
Okay.
lot.
Yeah.
I guess because I'm naturally more on the conservative side. So the
Yeah.
accounts that I have blown have been accounts where it's just lost and lost, and it's like a slow like trickle to eventually like you've reached max drawdown, which I
Yeah.
think is arguably more painful than full
It is more
margin,
painful.
one trade and it's done because that's psychological. But then I guess I figured that just the 10K wasn't challenging me enough. It wasn't making me trade in a manner that I wanted to stick to it, and I wanted to be aggressive enough to make the money and, take it seriously. So
Yeah.
I was kind of just having it there as a thing of like, if I get it, then it'll be cool. But it wasn't exciting in a sense. Because I think as a trader, it's like you kind of need that. There is like that rush to it at times. And I guess as you mature that you try to tame that. But it's just, I think, a natural instinct also of the game we play. And so I was like, if I'm gonna do this thing again, I'm not going for 10 or 50K. I want a
Yeah.
six-figure account. And so set it for the 100K.
Mm.
Even then, traded phase one and two over 7 months. So it was still
Crazy.
very conservative in the risk, but it was, I guess, the profitability of the strategy that was playing out
Mm.
there. Um, and yeah, got that end of April, which has been really cool. So I guess I'm part of now that 14% that has passed an evaluation, but I'm still in the 55% that hasn't achieved a payout yet,
Yeah.
which is now that kind of phase that I'm in now, which is working towards that. But even when you look at the stats, it's what is the average size of, payouts? It's 4% of, equity. So, you know, traders who are trading large capital aren't taking accounts from 2,500 rand to 50K or
Yeah.
100K to a million. It's smaller sustainable wins over time. And that's
Mm.
arguably why that's informed my trading strategy, because I know that
Yeah.
long term, that's what keeps you in the game. And
Yeah, the compounding.
you try not gamble the account. So I think for those who are willing to stay disciplined and commit to kind of seeing it through, prop firms are a great way. I think a lot of people try to gamify prop firms.
Mm.
If you have the money, you're just gonna buy two or three prop firms and play it how people play news events.
Yeah.
And that could work, but what then when you've got the account? Is that what you're going to keep doing? And that's, I think, the disconnect. Some people are like, no, in the evaluation, you should be really aggressive, just get the account. And then once you get the account, then you can dial it back a bit. But
Mm.
it's easier said than done, right? You're going to do what you used to doing, when you have the account, because nothing changes or
Yeah.
nothing should change. If you trade a certain way in the valuation, that should be how you trade post getting funded. But yeah, the rules change a lot when you have been funded, and I guess that's where a lot of traders get caught out, and where I think there's a lot of nonsense also with prop firms and how they structure their funded accounts or the environment to work against traders sometimes. So yeah, we can complain about them, but I still think great way to trade a lot more capital than you could put up yourself.
Yeah. Uh, yeah, that's crazy. Like for I can't imagine being on an account for 7 months. Like the longest I've been on a channel on an account was probably two 2 months, and over
Yeah,
2 months it was uh passing phase one. Then profit failing me for passing phase one because I traded like around news time. So
yeah.
it wasn't that I even traded at the same currency. It was because just because there's news at that particular time within that window. I
Mm,
never even like thought about it. But there's just because there was news at that time, they failed me, but they gave me the comeback. So then paused it again, then paused phase two, then sent me back for something else. Then I paused it again, and then went into live, made like $400, tried to withdraw, and then similar thing with the news. And then I'm like,
yeah,
what's happening? And
yeah.
then eventually I was like so tired of it. I was like, let me just like send this thing. And then I failed that I can't.
I think
But
full send. I
yeah,
mean, those are the frustrating things. It's like you can't take a trade depending on your account within like 5 minutes before a news event or 5 minutes after or two
exactly.
minutes sometimes. Or if it's a speech, the whole duration of the speech and then 2 minutes on either side. And
Exactly.
it's like different news events for different currencies. So it gets really tricky as for a retail trader
Yeah.
to keep up with all of that. And I think you think it's the same as when you were in your valuation, but it just changes and you're like, how, why did it change?
Yeah.
Because if I was, but yeah,
Yeah. Because
the logic behind it.
I even traded Alpha Capital, and I bought a 10K there and did this past phase one, phase two live. I think I made some on the live. And then
Mm.
I was going for withdrawal. They failed me because of spam entry. And
Or spoofing.
yes, but I wasn't doing that. I just opened the wrong lot size. So I was like, okay, cool, like two more because it wasn't the right lot size. And then
Yeah.
they failed me and I had to start all over again. I'm like, bro, like it wasn't even like
Yeah.
I did it one time. It wasn't intentional. Um, And
Jeez.
that's the problem with I think Profam is so many rules and so many
Mm.
rules that like aren't announced early on. Because remember when you're buying a Profam, when you're buying a challenge, you'll have those basic rules there that's like, okay, your phase one is 8% or 10%, your phase two pass is
Mm.
5%. And then you'll have the trailing drawdown or drawdown of
Mm.
daily drawdown of like 5%, or you'll have a
Mm.
max drawdown of 10 or 8%, whatever. Like, so you think those are
Mm.
the basic rules, but then there's so much underlining news behind that that you have to go read the FAQs and stuff. And that's
Yes.
where people get hurt, and that's where people don't make money off prop firms. Um,
Mm.
how have you adapted your trading strategy to those rules, if you have?
Sure. I have because I needed to. Otherwise, I probably wouldn't have the account right now, which is
Exactly.
crazy. Um, I think it goes back to the whole thing of trading sustainably. So there's obviously a lot around like risk management and like max lot size and things like that that you have to worry about. And no, I mean, it's crazy. It's like the one rule is if, at any point or if you consistently have about 3 to 5% floating in exposure, which isn't a lot,
Hmm.
then they can flag that as
Yeah.
like a potential risk, which could, get your payout denied. So it's like small things like that where you think it's actually safe, but it's not. And so I think because of the way I trade, at my starting balance, I'm at 0.5% risk.
Hmm.
Only once I've built a 2% buffer and profit, then I go up to 1%, and
Okay.
then
Decent.
I'll go 1% to
Yeah.
next payout or the phase that I passed or whatever. And so I know that the way I don't need to worry about any of the risk management side of things, which is cool. And it's like I don't have to change anything there. I think the biggest changes have come with navigating the news events, right?
Yeah.
Because there's
That are
so many
big.
different news events, random news events like trade balances or goods, which is like that thing can come out and the market won't move 2 pips. Like it stays still, and you're like, why is this a restricted event?
Yeah.
And so, because I think I also trade a lot of different currency pairs, I, depending on what I'm trading on that day, need to make sure that one, there's no news event occurring at the time where I'm either going to place a trade or come out of a trade.
Yeah.
Um, and then yeah, that it's compliant with any other rule. And so it's just been navigating that. My trade management has had to trade a bit and that change a bit. And that's why I think this week in the Nuggets, I did a segment around like how I'm using AI to help me with some of, because that's the biggest thing, right? As traders, it's like we get funded and then the decision making that goes into placing a trade increases, and you have to be mindful of all these other new rules and things, and then that almost throws you off balance where you're not used to all these new rules and changes and things, and so you don't have then same confidence to trade your plan or your strategy as you did when you were in the evaluation side of things. So as soon as that like bit of fear begins to creep in, or you trade a certain way and then how they come back and they're like, no, you breached the rule, or you violated the rule. It's like that frustration. I've been trying to basically make that process more efficient so that I'm, as far as possible, just focusing on this is what I'm analyzing based on my plan.
Yeah.
AI can check the compliance side of things, and it will either then tell me it's safe to trade or it's not safe to trade. And
Nice.
then I kind of just have to accept if it's not safe to trade, then I'll wait. And if it is, then it's cool, I can execute. But I'm trying to take the decision making out of that as far as possible because that's where a lot of the mistakes can come in. And I just some of the challenges you have to navigate. It's just part of the game. Once you get to a new level and you able to make more money, there might be a different set of rules. And I think you just have to abide by those rules until and that's where I really started to see that the goal is to build capital with prop firms to then build
Mhm.
your own personal account, or try get into a fund that doesn't have such strict rules, because I don't think prop firm trading indefinitely is sustainable because of all the additional rules that kind of come on that frustrate traders, and then you end up taking weeks out of the market or a month or two because now you're frustrated. You thought you had done the work, you had the
Yeah.
strategy, and you really did. And then the small thing just throws you off, and that's your flow gone, and it's it's frustrating, and it's hard to kind of keep bouncing back from that.
Yeah. Speaking of you trading prop firms and you going in risking 0.5%, right? That's part of your strategy. Um, And you also mentioned that you're trading multiple currencies, which I haven't seen much. I've seen a few people do that, right? That trade different
Mm.
currencies, but mainly off the dollar, right? So it'll be like Euro USD, it'll be GBP USD,
So,
or CAD USD. What's your trading strategy? And then what's your risk to reward ratio as well?
mm.
Yeah, talk us through that.
Cool. Um, so I'll basically walk you through like what I guess how my plan is structured, which kind of starts with me defining the environment, which is where my trading pairs kind of fall in. So I think on my full watch list, I've got about 26 pairs. And
Okay.
then each weekend yeah. So each weekend I'll filter that down to 6 pairs. So the best 6 pairs that are shaping up for the upcoming week, obviously based on my strategy, then that's what I focus on. If over the course of the week, 2 or 3 of those just become invalid or do opposite to what I thought they were going to do, I don't take them off and replace them. Well, I take them off, but I don't replace them. It's just I will focus on whatever I entered the week with. And I guess the thing around that is there's this, I don't know who started it. Someone told people someday that you need to pick one pair and master it,
Mm.
and that's the only way you're going to become profitable. I think I do recognize that there are individual pair tendencies and different asset classes obviously behave differently. Gold versus US 30
Yeah.
versus, Euro USD or CHF JPY. I do understand that, but I also do believe that your trading strategy or approach to the markets has got to be robust and for me, a trading plan that works really well and has the best chance of being profitable is one that you can apply to many different asset classes or markets. Um, and so I guess that's the thinking behind all these pairs, but understanding that I trade probably CHF pairs the least, like it's rare that they're going to be on watch.
Mm.
There's certain currencies that uh, I kind of just stay away from, but if it's falling within the plan, cool, I'll add it. And so I'm mainly a technical trader. That's kind of how I got into it, trading price action primarily.
Mm.
Started out way back when, kind of in the support resistance gang. And then 2020, I joined Falcon Trading Guidance, so Falcon FX. That's probably when I started focusing a lot on like or that's probably the biggest reason behind why I maybe trade the way I do now. They teach a lot of consistency, a lot of sustainability, risk management. But the strategy in and of itself is price action, but it's a lot of pairs. I think at the time, I think it's changed a bit. And so, but I think my strategy has been affected a lot by that. And then, over the years, incorporating some ICT as well, which is kind of what I learn a lot now.
Yeah.
So that's just to give an understanding of like how I got to my own strategy now, which is, I guess, a blend of Falcon and ICT.
Mm.
But I'm basically looking to trade within daily premium and discount levels. Call that support and resistance if you like. But yeah, identifying where price is on a daily, weekly perspective. Are we near that equilibrium, trading towards premium or discount, or are we on one of the extreme, ends, either at premium or discount, trading towards equilibrium?
Yeah.
And so depending on where we are, I then look at, your 4 hour and 1 hour to kind of gauge your intraday range. And then I try, well, not try, my plan only allows me to trade within that intraday range. So the 4 hour could obviously either be pro trend or counter trend to the daily. But my 4 hour and my 1 hour need to be aligned for me to basically take a trade. So
Yeah.
call it trend following, call it momentum following, but
Yeah.
it's basically blending a whole bunch of those different concepts to trade in line with, I guess, how price will distribute in the week from premium discount to equilibrium or vice versa. And then using ICT concepts within there in
Yeah.
terms of how I identify if we're in a 1 hour range, price is pulling back, then I'm looking for price to come into an order block or fair value gap to then take the continuation. So I'll
Mm.
need a correction to then get into the market to try, trade the continuation, which you can call trend following. So yeah, that's how I break down the market and look for opportunities. I guess when I'm ready to then execute. Um, there's two kind of different entry models that I'll use. One is a more aggressive entry, and another is a more conservative kind of reduced risk entry. Because I think that's what a lot of people don't maybe factor into their plans. There's always a higher risk and lower risk variation of how you can take a trade based on the level of confirmation, I guess, that you're using to take that trade. And so obviously depending on the high time frame, I get to how I'm gonna enter the trade. But when I'm framing the position, um, it used to be 1:2, and I've recently changed it to a minimum. Well, it's still about 2.5 to 3R, but I target about a 1:3 on average. Because of the prop firm rules, I don't set fixed take profit orders.
Okay.
That worked really well for me, to be honest, just setting a fixed 1:2, and then, let the trade play out. There's a little bit of management in that. So once price gets to 1:1, I take some risk off the table and then I just let it run to 1:2. Um, but now, obviously, because, if you close out a trade and it's coincides with a news event, then they're going to say, no, we're not going to pay you that money or whatever. So now I have to kind of manage it a bit more in a more flexible way, which kind of allows me to also let the trade run a bit.
Yeah.
So I target 1:3, but 1:1, I'll take off some risk. 1:2, I then move to break even, and I start trailing, my stops on
Yeah.
either 15 minutes or the 1 hour. And then once we get to that 1:3 level, I don't close the trade, immediately. I kind of just aggressively then trail my position from that point, just so that if the market is going to continue to run, because sometimes it will continue to, 4 or 5, percent,
Yeah.
then at least I'm able to squeeze that out. Other times it's going to come back and stop me out at like 2.7, 2.8, which is, I guess, the trade-off.
Yeah.
So yeah, price action management is kind of flexible and variable, but I'm targeting a 1:3 at a minimum in there. And I'll probably take, on quiet weeks, one trade a week.
Mm.
On busy weeks, could be about five or six.
Yeah.
So on average in a month, probably looking at about 12 to 15 positions, depending on how busy the month is. Other months, it's been as low as like 4 positions. So it kind of varies. It's when there is opportunity, kind of take it. When there's no opportunity, I'm not needing to be in the market. Yeah, so that's I guess the overall approach.
Yeah, okay, nice. I think talk me through your entry criteria, right? So you said there's two different approaches that you'll take, right? So is it then
Yeah.
going then into the 5 minute, 15 minute for entry or 1 minute even? What's your entry criteria? What are you looking for? You said you introduced ICT, so are you looking for what's it called? Turtle soup? You're looking for a silver
Ah,
bullet. What's your what's
no,
your
I get you.
yeah, what's your entry like? Because I think a lot of people learn okay, let's analyze the market of 4 hour, what's the direction? But
Mm,
people don't really necessarily know when should they enter the market, when should they take a trade. I think obviously
mm,
considering news because sometimes a red folder news could mess up the whole market. So
yeah,
besides that, what's your entry criteria in entering a trade?
got you. So you've determined where you want to enter a position from the 1 hour or whatever, and price now gets into that area. Um, so I've got two entry types. One is a risk entry, and the other is a reduced risk entry.
Right.
So the risk entry, the more aggressive, is so once price gets into, a POI, that's an order block or fair value gap, I'll wait. I'll then go down to the 15-minute time frame. I then need an internal time-based liquidity sweep, which is, I guess, a total soup um, within that POI. And then the risk entry is taken on the first swing point formation. So a swing point is essentially a three-candle formation where the highs of the first and the third candle are lower than that of the middle candle,
Mm.
the second candle. So you can kind of just think of the second one kind of trading the highest, and then the two on either side are a bit lower than that. But the third one is a rejection candle. You want there to be some sort of willingness from the market that, we're rejecting from this area. Coupled with that is a micro time frame confirmation. So my micro time frame confirmation is either a 1 minute market structure shift. So sweep on the 1 minute, and then you see a shift of structure with a full body close below the last sort of swing low, or a 5 minute key indicator area invalidation or 5 minute POI invalidation. So on the 5 minute, similarly, obviously everything's happening on the 15 minute, but when I drop down to that 5 minute, I need to see either, an order block that had formed that's now being violated, which will probably also be a 1 minute market structure shift,
Yeah.
or I'm looking for a fair value gap that's formed on the five. So, for example, if on the 15 minute, when we swept that internal time-based liquidity, on the 5 minute, you would have seen displacement, right? And that would have printed a fair value gap, which
Yeah.
is also just a three candle formation with, the high of the first candle, there being a gap between the high of the first candle and the low of the third candle that leaves, a gap.
Yeah.
I need to see that basically inverted. So price closing beyond that. So that's, I guess, the second part of the 5 minute POI
Mm.
invalidation. So I need to see one of those two things happening on the 1 minute or 5 minute, coupled with then the 15 minute as reversal formation. That's the aggressive entry. The reduced risk entry is basically similar in terms of the micro time frame confirmation. The only difference is once we've had that internal time-based liquidity sweep on the 15 minute, I'm waiting for clear displacement
Okay.
minute that either forms a 15-minute fair value gap or basically violates 15-minute structure.
Mm.
And then I'll set a pending order, which will be a limit order either at the base of an order block that formed or within a fair value gap that formed. So the reduced risk entry basically just looks for confirmation of, a bit more momentum coming in and structure shifting. And then I'm looking to take the an order trade on the retest of a particular area. So it's a
Yeah.
pending order as opposed to just aggressively market order,
Yeah.
entering that way. So yeah, those are the two ways I enter the market, and then yeah, stops are placed either conservatively or in a refined way. So conservative will be above the POI on the 1 hour. So the POI that you're taking the trade out of, you place it above there. That can be as high as 50 pips,
Mm.
50, 60 pips, or just above that 15-minute high, which is normally a lot tighter. But that's, a bit more aggressive, and I don't usually go for that because more often than not, price will sometimes trade above that 15-minute, even
Yeah.
if we've gotten our entry confirmation. So yeah, those are the two entry types.
Yeah. Oh, sure. So a lot of information. I think if you guys want to go more in depth on his trading style, I think you can find out his
Yeah.
he does breakdowns and stuff. And someone else on your channel as well that does pursue. Do you have a trading partner that you work with?
Yeah, so on our YouTube channel, it's two of us. It's Marcia and I. So Marcy, one of the boys we started trading with, that's his name's Marcelinho.
Yeah.
Not the Marcelinho you guys know, but one maybe you will over time.
Uh,
But yeah, he we started trading together while we were in varsity. Met way back then. He's also been trading for about 6, 7 years. Yeah, we started the six-figure challenge together. But yeah, I think he's still going through the evaluation. So we make the YouTube content together, and then the daily nuggets on Instagram and TikTok is yeah, myself. So you could say we're building the modern day trader brand
yeah.
together, and I
Yeah.
guess the daily nuggets are a segment of that. But yeah, if you follow us on YouTube, then you'll see kind of both our styles. And he trades similarly, but I think over time we'll maybe try see if we can kind of converge the strategies and put our heads together to kind of maybe refine
Yeah.
an approach. Yeah.
Yeah, I found myself when trading, it's always better to trade with somebody else that's trading the same strategy. Because if you're trading the same strategy, sometimes like if you're looking for the same thing, and if you miss out on seeing, oh, there's an order block here or whatever, um, then they can point it out for you. So I think
Mm,
because you're looking for the same entry criteria, if you're like, no, I think this is too risky at this point, or news is here. We kind of help each other be like, okay, listen, like now's not a really good time to trade, or vice versa. Like I think
true.
we be looking at this more. So I think it's definitely necessary to have a team around you when trading. I think people go into it
Mm.
like being, oh, no, I have to go solo in. And I think it can, to an extent, work if people around you don't know what they're doing. But if you have someone around you and you have a team that's like, okay, cool, let's push together to figure out like what's genuinely happening. Um,
Sure.
yeah, I fully like respect and see what you guys are doing because that makes a huge impact. When you have somebody else be like, hey, what's going on, or accountability in trading, because
Yeah.
easily go from I'm so strict to my rules to then full on gambling on your trades.
Yeah.
Um,
And I mean that's kind of where it started, to your point, is that we started even when I moved back to Durban, Marcy was still in Cape Town, and we started doing these weekly meetings every Sunday where we'd jump on, you know, these are the pairs, we kind of present the pairs we're going to trade for the week and like break down each pair, and then we can kind of critique each other's analysis.
yeah,
And that carried on for like 2 years before we started the modern day trader. So arguably the brand was kind of already being developed behind the scenes. But I think it just got to a point where we became too comfortable with letting each other down, which is maybe the downside also of being in a group that, won't push you to, grow the way you need to. And you need to recognize that when you're on the group. Unfortunately, we did, where we were like, there's weeks where we know we're not doing the work we need to do, and for some whatever reason, we're just both comfortable with it. So how
yeah,
can we add another mechanism of accountability to what we're doing? And that's when we started, the YouTube channel to say, okay, cool. We're not only doing this, for ourselves and going to shop, for each other, but we're going to put it out there. And now there's a whole audience of people who are kind of keep us accountable to showing up kind of each week and each day and all of that. So yeah, it's been very cool kind of building it together. Keen to
nice,
see where it goes.
yeah. That's amazing. I hope the channel takes off. I think it will. I think if you, I think people realize that there's more to trading than just, hey, there's lines on there's candles, and like if it breaks this or that, like there's more analysis that needs to go through. And I think that's when people will transition to then looking at you guys and stuff.
Mm,
Like we see in South African markets, very different. It's flashy
mm,
type of stuff. Um, but I think once you go through the fluff, then you realize, okay, we actually need to go in depth and that type of stuff. Coming back to strategy wise,
sure.
two questions that I have. One is, do you take into consideration the different sessions, right? So you'll have your entry criteria,
Mm,
but if it's London session, if it's New York or it's Asian session, do you
mm,
look like, okay, New York, maybe we won't take it that much, or you don't really look at the sessions wise? And then secondly, um, do you take any consideration of fundamentals? Because like
sure.
again, you're in the financial space, you probably know what's
Mm,
happening in the markets. Do you then take that information and then align it with technical, or it's not, it doesn't align?
sure. So with the first part, so yes, I have two different trading sessions in the day. One will be obviously London session. Now that I think we're outside of daylight savings, it's 8 to 11. And that's I think that's gonna change a bit because ICT also changes it over time, and then that's mainly where I started introducing these sessions, or some people call them macros, or kill zones. There's like a lot of
Yeah,
different names for them. But my London session runs from 8 to 11. That's typically when, the most volume is within that London session. And then my New York session essentially runs 3 to 6, but I just carry that over because London close is 6 to 8.
mm,
So I'm essentially still active from three right up until 8 p.m. So
right.
those are the only two windows where I'm executing and placing trades. If I am in a trade, I will manage it in between those sessions to, trailing stops or whatever. And if it takes
Yeah,
me outside of those two sessions, then that's fine. Asian session I don't trade for obvious reasons. It's like the middle of the night, but some people do and they make it work. So yeah, I have two defined trading sessions. That just kind of also keeps me disciplined. I think there's a lot of trades I filter out from keeping it in there. There's probably a few trades that I miss as well, but I guess there's always a trade-off. And then in terms of fundamentals, that is, I don't take that into consideration now in terms of my decision making. So if you had to ask me if we had to rule out fundamentals and you couldn't use them, would that affect? Probably not, because I don't use them in my process. But that is a much longer term sort of intention to filter that and what I'm learning within the financial planning side of things into my analysis and how I essentially position myself.
Yeah,
Probably not for the week, because I think the hardest thing is interpreting fundamental news and macro factors and all of these things, and trying to attribute what difference they actually make to the intraday moves, which
yeah,
is few and far between. But you can probably paint a much longer term picture when you understand, the US's policy stance, for example. How's
mm,
that gonna, impact, their relationship with the EU
yeah,
and or with, the UK. And so there are certain currency pairs there that you can expect to either appreciate or depreciate over time, as long as this is, the mandate of, the Fed or
mm,
the European Union. So there's that aspect of, I guess, trading currencies that I'm still looking to incorporate into my approach, but I think it takes a lot of time.
yeah,
And so hence right now, just focus mainly on the technicals. But yeah, I guess my work allows me to still keep in touch with, the markets and what's happening on the macro side, which probably plays a role into some of my decision making and whether or helps me understand sometimes why the dollar is behaving the way it is. And
yeah,
and if the technicals are also confusing, then it's just like double confirmation to say, fine, I'm staying away from dollar related pairs this week, and I'd rather focus on, yen or pairs or whatever. So yeah, that's kind of how kind of my trading sessions, as well as then how I factor news and things into it.
yeah. I think for me personally, I I make an effort to look out for fundamentals, right? So it's not necessarily our
Mm,
trades based off fundamentals. That's definitely technical. That's my main thing that I'll take a trade off. But
mm,
fundamentals, for example, yesterday was the whole Israel-Iran war.
mm,
And I was like, I'm staying out of the markets because it's so volatile just based off a war breaking out. Gold skied all the way up to like 3, 4, 30 or something around those lines. And then I think the
mm.
euro, no, the USD probably dropped, right? I'm sure. I don't look at that much. I don't look at the chart that much because my dad's birthday.
Yeah,
Um, but I knew that for trading day because of all that. But also it's Friday. Like Friday's also so choppy. So that's
yeah,
so that's why I look at fundamentals in those senses. And then I'm like, if it's too choppy, if it's too much, like I knew the previous week with Elon Musk and Trump, I knew that Euro USD would be bullish because dollar, there's so much happening in the US right now. So Monday was very, what was it? Monday was bearish, but the rest of the week was bullish, right? So I knew the what's going to happen in the week, right?
mm,
Also looking at technical, so both aligned, technical aligned and fundamental aligned. I'm like, okay, cool, this is a dope trading week. Um,
yeah,
so I think if you incorporate it, but incorporate it in another way where you're making decisions based off fundamental, but if it aligns, then it's like a
yeah,
confluence basically.
sure.
Yeah,
Yeah, I'd challenge you a bit though, and I think that's something that holds us back at times as traders, where we see things happening in the market that where we don't fully understand how it's going to affect the market, like the Israel-Iran,
yeah,
conflict now. Yes, you see it, but I'd argue don't automatically jump to, hey, this can't be a trading day, because
yeah,
I don't think it filtered into maybe all the asset classes or pairs.
Interesting.
Perhaps some were affected, but I think the hardest part around trading is, and especially with macro and news, which is why I think I'm being very patient with it, is what's noise and what's signal kind of thing.
Cool.
Because there can be volatility, but volatility doesn't also always determine direction.
Yeah.
And I guess also, especially when you are trading a lot of different pairs or currencies or assets, which of those won't be affected, because some literally won't be affected at all. So this, especially with the whole like Friday trading news thing, also it's like there's this also conception that on a Friday, market doesn't move, take it easy. And it's like sometimes most of the opportunity I've gotten is on a Friday.
Oh,
Sometimes I'll literally wait the whole week
yeah,
and
yeah,
only trade on a Friday. So it's around, what assumptions are we making and what do we actually know to be true in terms of how the market will play out. And if your plan doesn't restrict you from trading on a particular day for a particular reason, then you've got to ask yourself, why are you not participating in the market on that day? Is it out of fear or, uncertainty? If it's
Mm.
uncertainty, fair. You also don't want to be guessing. But, I don't know. Of late, I've just been trying to give myself a little excuse to
Mm.
say, Ish, I can't trade today, or I can't, because then when I miss an opportunity on that
Yeah,
day, that's normally when I beat myself up a lot. Because you'll find something does maybe play out really well, and then you've been on the sidelines, and then you beat yourself up that you kind of didn't take it. So if it's defined in your plan that if a certain thing happens, you risk off, then
yeah,
yeah, that's fair. Being disciplined. Otherwise, I think it's game on, regardless of
yeah,
what's happening.
yeah. I think the thing, like, I've also beaten myself up though, where I haven't taken a trade, but on the flip side, it's when you don't take a trade, you're not losing money. But if you take a trade and you lose, then that's how we think.
Yeah,
If, like you said, if it aligns in your trading plan, then 100.
yeah. A
Um,
cool thing that I've seen that I'm recently implementing that you think try is looking at the types of losses that you're taking,
yeah,
um, emotion based or technical based, uh, but then also documenting your missed trades and then also
yeah.
obviously why you're missing those trades. Then you kind of look at all the positions you've taken versus, what trades will be filtered out, whether let's focus on emotional only because the technical traders, it's going to be, you can fix that with strategy, but what trades are you taking because you're greedy or emotional or, you had FOMO? How much more would you have, in your bottom line P&L? And then what trades are you missing? Not all of them are going to be winners, but why are you then missing those trades and how much more is that going to add? And if you weren't missing so many trades that were profitable, and if you weren't taking so many trades or losses that were emotion driven, how much closer would you be to the
Mm.
money that you think you should be making, kind of thing? And then how do you bridge the gap, kind of thing? So I
No,
think
that's valid.
that's,
I think, like you
yeah,
said, I think it's very necessary to document your trades to know. I've the trade that I don't take on my live accounts or my trading accounts, I'll demo trade it so I document it so I know that okay, if this played out, what it so I still look at the charts on. I do trade on Fridays. It's just that like certain days I'm like it's like a lot of manipulation. Uh,
sure.
but coming back to yourself because meeting's gonna end in a bit. Um, let's talk me through your biggest win in trading, right? So what's your biggest win?
Mm.
What's your biggest L? Because I'm sure that biggest L probably like, I need to go to a profit trade. So what talk me through that. I think
Because,
a lot of people are curious about that, right? I think
yeah,
they want to know like, is it actually should I actually get into trading? And people generally judge it based.
yeah,
What's your biggest win? What's your biggest L? I think when you tell people you are trading, we're like, oh, how much have you,
mm,
oh, that type of thing. And I don't think that's the
yeah,
approach, but people, if we don't know trading, they don't know that it takes a while.
yeah, sure. So my biggest win actually isn't on, well, I can say my biggest win is probably split into two because
Yeah.
the first win was when I was still trading on my own personal capital pound account. It was pound JPY, I remember. made £400 in a day, which is
Okay.
about, I think like 8, 9K. And I mean, as like a third year student, that's it's decent. Look, you could probably do that in promos.
Yeah,
But I mean, it's a very decent amount to make in a day. I didn't withdraw it. I lost it all, which was the heck of it. But I mean, that's the most I've
biggest
made that I can say
the
as
same.
mine. Yeah. Um, and then, but then I also say that's probably not the biggest win I've made in a day because, now trading the six-figure account, but I obviously haven't processed the payout. So is that my money?
Yeah,
Maybe not. But because, when I've had on the current $1,700 in a day, which is what, just shy of probably 50K
yeah.
Rand value. But again, I'd give the two examples because the one was actually my money and I could have drawn it and the other wasn't. Biggest loss was, I remember it, bro. I was fresh out of a seminar, BFG seminar, where that coach told me we were going to make money in the week. I
Uh,
think it was pound interest rate decision.
yes.
I think I pledged a lot of like my savings and allowance. I opened a 5K account, went full margin, and just basically lost it in like a minute. But
Crazy.
like in terms of biggest, I've lost more now on the.
Trade useful.
Sorry?
Trade useful margin.
Yeah. Back in like my first or second year of trading.
Both are in
So I
and
think that was one of the few times I blew an account off like one trade. And it wasn't probably the biggest loss because I've probably taken like a $1,400 loss, I think, in a day now, which is about 28,
yeah.
30K. But that was off like a 1% risk. But the biggest loss that I felt where I saw it happening, I just closed my screen, I muted all those groups, and I went to sleep in the middle of the day, which is what you do when you lose like that and you feel it. Yeah, it was probably about 5K in a day on the just going full margin, really. But yeah, the losses are a lot bigger now, but don't feel
You don't feel
as
it.
big.
Yeah.
Because I mean, realistically, I mean, at the moment, I'm in drawdown of about 3%, and that's like $3,000, which is about 60K. And when I feel like that, it sounds like a lot, but three 3% is actually nothing, and that could be made up in two trades.
Trade, yeah.
So
3 hours and you're there.
yeah. So I mean, yeah, that's I guess biggest win, biggest losses.
Yeah. Well, and the thing is like those trading
And
days.
yourself, I'm curious actually, in
Biggest
terms of losses.
losses wise, so many funded accounts, man. It's not even funny. Um, funded accounts, I've lost a lot of funded accounts. Personal, I haven't, to be honest, I've never put in more than a K. Yeah, I haven't put in personally over a K into a funded, into like a personal account. Like
Sure.
because to be honest, I only started trading a year ago, right?
Okay.
Like 4x was a year ago. I've been in the financial space, like in the investing, the stock. So have
Mm,
experience in the technical space, but never so much forex. I've been exposed to forex like three years ago, probably. This guy was like,
mm.
oh, come join my signal group, whatever, for free, and I'll give you signals. And then, oh, I put in a K. And then I took the trade and he didn't teach me lot size properly. So I think I opened a one lot size on a 10K, on a 1K account. And I was like,
Ah,
and
ah.
I think it went in a minute, bro. It went in a minute. And I was like, what happened? Um, so my biggest L would probably be personal capital, never more than a K. Maybe, oh, probably 2K. But
Sure.
took, I probably took a K to like 2K, whatever, and then I've blown it. Um,
I haven't.
It happened. It happened. I was like, I should have just withdrawn. No, actually, to be honest, I took that. I think I took that account from like 200 or like 500 to what 2K, and then I blew it. Similar to you, like you're like, I can take this to 10K. And then funded wise, blew like 25K account, blew 10 number like probably 10K accounts I've blown.
Yeah.
5K is blown, 5K blown. But I did get a payout. So yeah. But
No, it's yeah, there's no greater pain than watching an account go to zero.
yeah.
If you've experienced that, then yeah, you maybe have what it takes. If you experienced that and gotten back in the mark, then yeah, maybe you got a shot.
Yeah,
The game.
yeah, tons of it. But yeah, we have 2 minutes left. Um, yeah, guys, if you wanna follow the modern day trader, follow Sam on his social media, I'll link it down below. He posts daily nuggets. And I think it's very
Daily nuggets.
sorry?
Yeah, no, sorry, I was just saying daily.
Daily,
I
yeah,
think
yeah,
today's day 164 or 5, 165 today.
yeah. When
Day
it's
of recording.
daily, it means daily, like every single day is posting. uh,
Yeah.
so yeah, anything else you want to shout out that you're working on?
Yeah, no, I guess just appreciate this. I guess it's if there's anyone who's I guess in the journey or still learning, just give yourself time. I don't want everything I've said and I guess my mindset around it to discourage you. Like that wasn't the
Yeah,
purpose. I think it's just to more give you a realistic lens into what it actually takes to stay in this game and actually make money over time. It's not going to happen overnight. Um, but it's going to require you to put in the work. It's going to require you to be patient. But it will pay you if you commit to it long enough. So yeah, join
yeah,
us on the Daily Nuggets if you're keen to learn more. And I think this is really cool what you're doing with the pod, Jared, just exposing people to different ways to making money in South Africa, um, because there is an abundance of opportunity online, and I think your podcast is doing a really good job at showcasing that.
for sure. For sure. Thanks, man. I appreciate it. But thank you so much for being on the podcast. Guys, make sure you like, subscribe, follow Sam on all these social media platforms. Hopefully we'll get him back on the pod soon. But yeah. Uh,
Yeah, let's do an in-person version of this at some point because we're both in Cape Town, but we should link in the city, bro.
100%. 100%. Cool. Thanks so much, man. Guys,
Thanks,
like.
bro. Appreciate it.
Peace.